What's going on, guys? Welcome back to the channel on this sunny Saturday morning. Now, this is a video I've been very excited to bring you guys. We're going to be covering a lot of things, and just like I promised a couple days ago, we're going to go over this theory of an end of the year rally with the Santa Claus rally and how tax loss harvesting does work. But on top of that, today we did get news that the SEC is proposing Rule 10S to essentially force the short sellers of all stocks throughout the whole entire market, AMC included, to start reporting a bunch of information revolving around those short positions. Because as you guys already do know, if you are a hedge fund and you take on a short position, you are not legally required to disclose that short position. So you see very little actual short positions being disclosed, and this might all change. This will give a lot of pressure to these hedge funds to cover their positions on top of all of the other data that we are going to cover in this video. So there's a lot to be excited about. Let's get straight into it, guys. Hit that like button for me. Consider subscribing to the channel. And if you guys are not signed up with Moomoo, Webull, and Public, those are the three main brokerages that I have been using. Links for those in the descriptions. All of those, you get various different amounts of free stock, so definitely check that out. But let's get straight into this video, guys. So on Friday, AMC did close up 1.14% for regular trading, up 0.42% in after hours trading. So it looks like the start of next week is going to be bullish. As we do know, about 95% of the time when AMC closes green on Friday, we open substantially higher green on Monday. So we're looking at a great next week. If I were to say so myself, we closed above that $40 price, which was very important. We're above the 50 and the 100-day moving averages, as you guys can see right here if we do zoom in. So all of that incredibly bullish. It looks like I said, next week will be good. But let's get into this whole situation with the Santa Claus rally, how tax loss harvesting works, and how this new SEC rule change will basically put pressure on the hedge funds to cover on their short positions. And a lot of this, all of this essentially, is going to be happening by the beginning of 2022. So here in the next 45 days or so. So let's first off start with the Santa Claus rally. So this is a term that some of you guys may have heard before. Some of you guys may have not heard this. So what is a Santa Claus rally? A Santa Claus rally describes a sustained increase in the stock market that occurs in the last week of December through the first 2 trading days in January. There are numerous explanations for the cause of a Santa Claus rally, including tax considerations, a general feeling of optimism and happiness on Wall Street, and the investing of holiday bonuses. Another theory is that some very large institutional investors, a number of which are more sophisticated and pessimistic, tend to go on vacation at this time, leaving the market to retail investors who tend to be more bullish. So it doesn't always work out this way, but you do, like Investopedia says, you typically have a Santa Claus rally. And a lot of this is due also, which they don't say here, but a lot of spending is done in the economy. So a lot of stocks, a lot of companies, as we do know, this is the biggest advertising season of the year. People go shopping, they buy Christmas gifts, so on and so forth. That generally leads to people being more bullish about stocks in general, not just AMC, but stocks in the overall markets. So that is the Santa Claus rally. That is the first thing to consider when we're talking about the end of the year, possibly a MOAS happening by January. As well as that, what ties into this is tax loss harvesting. This is also a term that some of you guys probably know, some of you guys probably don't know, but tax loss harvesting generally works like this. You sell an investment that's underperforming and losing money, then you use that loss to reduce your taxable capital gains and potentially offset up to $3,000 of your ordinary income. Now, this number varies from person to person, from situation to situation, but generally speaking, if you sell stock at a loss, you can write that off against your gains for the year. And when you're considering AMC and this journey that we've had a lot of short sellers that have went into AMC, that have got out, some at different prices, but most of these short positions are still underwater at the current moment when AMC is almost $41 per share. And we can see It's very unfortunate Fintel does not have all of these short positions, but still, like I said, you only rarely get firms that actually report their shorted share positions, like JP Morgan US Large Cap Core Plus Fund 1. They did report 178,000 shares that were sold short, but most of these are put positions. And when we get into what we're going to talk about next, that is where this is all very important and what really ties all of this together. So as we do know, short sellers substantially down on their positions, and they're probably up on a lot of their long positions as the market has just continued to rally. And I don't mean long positions in AMC. Obviously, if they bought AMC back in Q1 of 2021, they're up on their AMC positions as well. But we're talking about the short sellers and potentially causing the MOAS. So that is the current situation. A lot of these hedge funds, if you think about it, like I said, they're up on a lot of positions. They're down on some. AMC is probably one that most short sellers are down on. Some of them got lucky, shorted at the top in between 50 and 60. If you do want to get technical and get into the cost to borrow and all the nuances there, they're probably down as well. But when you mix the Santa Claus rally, the tax loss harvesting, as well as this that just came out today, which is the icing on the cake, guys. So this is proposed rule 10C1 would require lenders of securities to provide certain terms of their securities lending transactions to an RNSA. The terms to be provided to the NRSA, which the NRSA would make public, include the legal name of the issuer of the securities to be borrowed, ticker symbol of those securities, time and date of the loan, name of the platform or venue if one is used, amount of securities loans, rates, fees, charges, and rebates for the loan as applicable, type of collateral provided for the loan and the percentage of the collateral provided to the value of the loan securities, termination date of the loan if applicable, and the borrower type, example, broker, dealer, bank, customer, clearing agency, or custodian. And this is all huge. So we're essentially going to get the inside scoop on what is happening with the hedge funds and institutions, how they are going about putting up collateral, how much they're getting charged for fees, and when these loans could expire and when they could be forced to cover. This is basically clarity, more transparency than we have ever seen in the marketplace. And when we're talking about AMC, a highly shorted stock, and everything else, including some of the other just more data nuances to talk about, and this is really a huge thing, it's going to be the low volume, and we are seeing incredibly low volume heading into really the last month or so, with volume levels in between 20 and 40 million typically on a daily basis. So what this means, if you see a lot of shorts trying to cover all at once, or if there is a somewhat of a pressure to get out of their short positions, because we now know their hands, right? You don't want to sit on a hand where you know it's going to go against you eventually, and once those people find that out, it's going to cause a lot of pressure. It's going to cause a lot of firms to want to get out of their positions, probably before this is actually implemented. Now, two other things that I really want to cover, and what we kind of just talked about was the volume, but I really want to drill in your guys' minds how this plays into seeing a rally going from low volume to high volume, and what it means that AMC is staying at these elevated prices with such low volume. This right here is the key that most people are missing. And on top of that, we're just going to go over how many shares are shorted and the days to cover, because these are the most important things, and forget anything else. When I am seeing this low volume and days like today where we did go up, or I should say Friday, yesterday, days that we went up over 1% on the day and over 0.32% in after hours, that is telling you guys a pretty clear picture of people are holding onto their shares, and you're just seeing a little bit of buying activity, probably from the market makers that are hedging out all of these options. Nothing too crazy as far as FOMO buyers, but not a lot of selling, if really any selling, any substantial measurable selling that is going on. It's just simply not happening at the current moment. But if you take a look at any stock, or just AMC, that's what we're going to use obviously for this reference. Take a look back here on January 5th, 2021, when we hit $1.91 per share for AMC stock, we seen a volume day of 27.7 million. Sounds very familiar to what we are seeing. And on Friday, even seen less volume than that, only 20.5 million for volume. Now, fast forward a couple weeks later, once we get this huge volume spike, you've seen 1.2 billion shares traded hands, and AMC went up 10x in value. This was because we seen low volume heading into super high volume. Same thing applies back here for this June rally. We were seeing before this rally in between 15 million on the low end and about 40-50 million on the higher end, and then we did see 757 million for volume back here on this biggest volume day in June. This was June 2nd, and the price of the stock went up about 10x. Now, fast forward to after this, you were just seeing back and forth volume days. Low volume, high volume, low volume, high volume. The stock really wasn't doing too much. It was actually trending to the downside. Now we are pretty much consolidating in between about $35 and $45 per share, but we are on a slight uptrend, and we are now almost at $41 per share, and you are seeing this incredibly low volume like we seen before these last rallies when AMC was crashing, or I shouldn't say crashing, but going down quite consistently. But now we are not seeing that same downward trend with the low volume. So eventually volume will come into the stock. Mark my words on it. I don't care what anybody else has to say. This is not an opinion. This is a fact. When the volume comes into AMC, AMC is going to go through a major rally. So that right there is very key, as well as just the large amount of shares that are still sold short. The last exchange reported short interest data that we did get was about 95 million shares that were sold short. That is over 4.5 days worth of volume that we seen on Friday of just shares that need to be covered. That's not including regular apes buying shares. That's not including the market makers and how many contracts they will have to hedge for when those FOMO buyers enter the market, and then obviously FOMO buyers and shorts having to cover on this massive short position. And that is reflected in even the days to cover. Now, this is a running average, so we are seeing this going up from two exchange reported short interest settlement dates ago at 2.22 days to cover. Now at the last one, 2.66 days to cover. This is going to continue to go up. And like I have said many times, this is a main argument for a lot of bears against the AMC MOAS back during the last two rallies, was essentially saying if people are buying and holding AMC, how are we seeing 100, 200 million for volume on any given day, and the days to cover not even at 1 day to cover? Now that argument cannot be said, with the days to cover shooting through the roof and the price of the stock actually going up, or at least trending sideways on any given day. So all of this data, guys, really, really important. Hopefully this makes some sense to you guys. If it does not, I will go over all of this, because I want everybody to be fully aware of this rally and how this is playing out in front of our eyes. It's not too obvious until you get it broken down just like this. But keep in mind, I am not a financial advisor. I am not a financial planner, so I have no legal obligation to be right. I'm not telling you guys to do anything. I'm not telling you guys to buy or to sell. Do what you guys want to do. This is the due diligence. This is the facts behind our current situation. If you like the stock like I do, buy the stock. If you don't, sell the stock. I really don't care what you guys do. Same thing goes for options. Be careful with your money and protect it. Nobody else is going to look out for your money the way that you will, and that goes without saying as well. So hit that like on the video, consider subscribing to the channel. Let me know in the comment sections, what do you guys think about all of this information? Does it make sense to you guys? Do you want something broken down a little bit more? Let me know that information. I am here to provide you guys my insight and the due diligence. As well as that, check out the links in the description if you guys want access to all of my trades in real time. The link to do so is with the buy and sell alerts. We have been killing it over there, and that is very inexpensive if you want to be a part of it. And the links for free stocks, if you guys are not signed up, like I said, with Webull, Public, and Moomoo, check those out. You guys will get a ton of free stocks just for signing up. Most of the time, not even depositing a single dollar to receive that free stock. So that is going to be all for this video. You guys enjoy the rest of your weekend, and I will see you in the next one.